Accounting cycle. Accounting cycle is a step-by-step process where followed by business to record, classify and summarize financial transactions. There are many steps involved in a accounting cycle. The main step is to identify a transaction, whether the transaction is based upon receipts or invoices. So, the first step of an accounting cycle is to recognize or identify the transaction, whether it is a invoice or receipts or etc. So the first step of an accounting cycle is to identify the transaction. The second step is generalizing this transaction. So for an accounting cycle, the main step is generalizing the transactions. The literal meaning of generalizing the transaction means that we have to double entry the transaction of the given accounts. So the major step of accounting cycle is to identify the transaction, then generalize it in the double entry form. Next, so after entering the general transactions, the next step is to post to ledger. So it is an important task that we should first identify the transactions, then we have to generalize the transactions, then later we have to post to the ledger. Then the most important is to prepare the trial balance. Trial balance is the most important function in the accounting cycle. The debit side and the credit side must be equal. Then we can assure that our transaction or the financial basics is it is in a correct way. Then adjusting the entries. In many times the trial balance it must be not equal. So when we are going through the trial balance, if the credit balance is greater or the credit balance is lower, we have to adjust the entries. Adjusting the entries to ensure that the balance is equal in the debit side and also the credit side. Next, adjusting the trial balance. Adjusting the entries and adjusting the trial balance is to ensure that the debit and credit side of the accounts are equal. Next, preparing the final statement. So in every accounting we have to prepare the financial statement. Preparing financial statements. Financial statements is tells about the financial condition of a firm or an company or an individual also. So the preparing a financial statement is also an important part of accounting cycle. Next, closing entries. So we have to close all the entries in an account. So we will close an account in the final section by drawing two lines. So every account shall be closed to tell that the accounts are finalized. So the last, posting closing trial balance. So this is the last step of accounting cycle. It ensures that it is after post closing the trial balance, it is ensured then we can also tell that the accounts are closed for the particular area or particular time from 1st April to 31st March. This is the financial year. This post closing trial balance tells that the accounts of these particular time has been closed and ensured for the next year or next financial year. Next, when we talk about the accounting cycle, there are golden rules. They are also known as rules for the accounting. So the first one is personal account. Personal account is very important in accounting. They have two rules. Mainly all the golden rules are about three main accounts: personal account, real account and nominal account. First of all, when we talk about the personal account, we have two rules. Rule number 1, debit the receiver, credit the giver. Next, real account. Here also there are two rules, that is debtor what comes in, debit what comes in, credit what goes out. Then coming to nominal account rule, there are also two rules that states that debtor means debit in expenses and losses and credit incomes and gains. So these two rules majorly tells about the the amount, means suppose we have an example. Suppose what comes in, okay, real account. Suppose example, we brought the furniture. So furniture will go into the credit of cash. So